This is episode 1150.
People come in and say, well, my job is to cut costs and my job is to grow revenue. No. My job is along with everyone else's, which is to make this company successful, right? And as long as everyone believes that and everyone understands that partnership is easy. When people don't, it becomes a little more difficult, right? And at times, sure, when I come in, people feel threatened by me at times because I'm the CFO. And so people can definitely feel threatened by me. And if I question things, and sometimes I definitely question things a little bit, probably more aggressively than I should, but I will question everything. And I think the more people understand the fact that I'm questioning out of the good of the business and through that partnership, the better that partnership is. And I think that one of the things that COVID set back is some of that partnership element, because it's difficult on this screen like this to create that partnership at times. And so I think with more people back into offices, and whether it's 1 day a week or 3 days a week or whatever that looks like, I think the more I create that personal relationship with someone and break bread with someone and develop that partnership, now when I come in and say, hey, let's really take a look at this, they realize I'm not here questioning the work they've done. I'm trying to help make them better, help the organization get better.
Before we get into today's conversation, I want to set the stage. Advertising, technology, finance, all three are colliding right now in ways that are forcing CFOs to rethink how they lead, where they invest, how fast they move. This isn't just about managing numbers, it's about understanding how a business actually works when markets are uncertain, capital is more disciplined, and AI is accelerating decisions everywhere. In this discussion, you'll hear what it looks like when a CFO approaches the role as an operator, a strategist, and a partner. Our talk with CFO Matt Novick begins after this. Hello, CFO Matthew Novick is with us. Matthew's career spans senior finance leadership roles in data and technology-driven businesses where finance and strategy are closely linked. Today, as CFO of TripleLift, he helps guide an advertising platform operating amid rapid product and innovation, global expansion, and evolving market dynamics. His focus, of course, includes capital allocation, performance management, and supporting growth while maintaining financial discipline. Hey, Matt, welcome.
Thank you. It's great to be here. I'm really excited to spend some time with you today.
Good to have you back. We were just talking, you and I. Matt was on the podcast 10 years ago, and frankly, I don't even know if those episodes are still in circulation, but we're really happy to have him back, and we're going to just take you down that lane we love to do. We love to ask finance leaders, look back across your career and try to identify for us those experiences you feel, best prepared you. Now, I know you've had several CFO chapters, but we're really wanting to understand what prepared you for the role originally when you look back. What were those experiences?
Yeah, listen, I have a very different background in the sense I take myself back to childhood. I actually grew up in a family business in Portland, Maine, in a furniture business. And I learned from an early age what impacts a business, right? And so as you think about what impacts not just finance, but how to run a business, right? And in a furniture business, what's creditworthy, right? If someone's looking for credit to buy furniture, for example, I learned at an early age how to read a credit report, how to understand what creditworthiness is. I understood how to price. I understood how to sort of run that whole business from my father, my earliest role model. And so taking that then into the world of finance, as I grew up and as I got older, and bringing that to really one of my first jobs at AOL and really understanding the operational elements, right? I was at AOL both in the expense side and on the revenue side, understanding how do you run both sides of the P&L, right? There's a lot of operational elements. When you first think about finance, you think it's about accounting, right? It's about being a CPA. It's about counting, right? Counting dollars. And while it is about counting dollars, I'd say what prepares you the most is understanding more than anything the operational elements of finance, right? Not only how do you put a P&L together, but more importantly, what does it really mean, right? And I think that is something that has stuck with me forever, which is understanding what does it all mean and how does it all fit together? And that makes you count better, right? That makes you understand is the counting right or wrong, right? As I always say, even every month right now when we close our books, if you don't understand what it goes into closing those books and what the vendor's doing, what the dollar means, and is it right or wrong, then you're never accurately going to display your business. And so really understanding the operational elements, not even the financial elements of it, so that you can better understand how to run a business and financial elements of running a business.
From those very early stages, I just want to point out, too, that your very early chapter, you had a chapter at IBM as a consultant, and you mentioned AOL. You're a director of sales operations there. So already we see the future path that, so many finance leaders would have come up a more traditional path, perhaps, in the accounting ranks and tried to chase after that operations experience. It seems like you were already sort of in that lane to a certain degree in your early years. How am I doing? Am I close to your reality?
Yeah, no, that's exactly right. As one of my CEOs once said to me, I'm the most well-connected CFO there is, especially when it comes to the sales ranks, because I came up from a sales operations perspective, right? And knew all the salespeople at AOL and worked on sales comp plans and then understood how it all connected to the financial elements of the business and the P&L. And so I definitely came up the ranks in a very different way. And I think for a long time through my financial career was very different than a lot of the other CFOs out there. And I'd say that's been a huge change, and I've seen that from a lot of my colleagues now and friends who are other CFOs. I feel like there's been a huge shift from CFOs. And I think some of it also is the fact that I'm in, venture-backed and private equity-backed businesses, but the push has been a lot more towards CFOs who understand how to run a business as opposed to being a controller or being an accounting-led CFO. There's a lot more operational-led CFOs these days who understand how to run businesses. And so I think I was one of the earlier folks that took those roles, but now I look at a lot of people that look very much like me in the sense of, what their backgrounds were, how operational they truly are.
And it seems to me that I want to point out, I don't know if the number 7 CFO chapters, it looks like you've had quite a few appointments along the way, and you've had something like 4 or 5 of them since we last talked. So I just want to point that out because I think you had an accelerated path to the CFO office as well, which means you had a few, you don't have any gray hairs. I was saying that one of us aged since the last time we talked, and it's not me, Matt. That's a good thing. But you must have been rather young, I think, when you got your first CFO appointment. So you're one of those, you got there quickly. And again, I think it had a lot to do with the operations experience and your sort of broader perspective on things. Am I right about that?
Yeah, no, totally. So first of all, there are definitely some gray hairs in here, as my wife would tell you, and you can't see from behind, but the hair is definitely on the thinning side of things from the last time we spoke. But yeah, no, definitely. And I, one of the ways is because I was running sales operations and I was understanding how it all fit together on the finance side. I left AOL and went to a company called Magnetic and was brought to Magnetic by the old head of AOL advertising. His name was Mike Peralta, and he taught me a lot about how to run a business and how to run, in many ways, a sales team. But I got moved right from there to went from AOL to becoming a VP of finance. And about 2 years later became the first CFO, at Magnetic, which was an early stage startup. And I was in my early 30s. So yeah, I definitely got my first appointment in an early age, and, a lot definitely has to happen. And yes, it was, really hard work and dedication, but it was also, right place, right time and right opportunity as well.
I just also want to point out that today you've had, CFO roles within, companies in advertising, data, technology. We're wondering what's changed in how you approach the role as you moved from one CFO chapter to the next. Was it the same role? Was it Was there distinct differences?
Yeah, no, I think that it's very similar roles, right? And I'd say similar. I wouldn't say exactly the same. And right, there's no two roles that are exactly the same. I've learned in life, right? And you pick things up as you go, and you learn more as you go along in terms of how you operate. And definitely, I'm definitely a different CFO from my early 30s to where I am now, right? And in the sense of how I conduct myself, in the sense of what I've learned and how I think about putting businesses together, or how I think about growing and scaling businesses. No two businesses the same in sense of scale, whether they're ad businesses, whether they're SaaS businesses, whether they're, how the technology plays, and then in what stage of growth they're in, whether it's a PE or venture-backed business, is a totally different role, right? And I'd say totally, but very different role. And so I've had a lot of roles that are very different, but continuing to keep that base, right? The base of understanding how to operate a business, the base that I've brought with me from my early days of being a CFO have really contributed to who I am today and how I operate today. But it's very much about understanding the business you're in, right? As I say, I don't just go to any company when I think about going to a company. It's not just about the role. It's not just about the title. For me, it's a lot about what does a company do and how do I get excited about waking up every morning? Because I may be the CFO, but I'm a sales guy as well. And everybody's always selling. I'm a sales guy. I'm a technologist. I'm in everything, right? And I have to understand how the business operates to help from a financial aspect. But I also talk about it in market. I'm talking to bankers and doing corp dev work as well. And you have to get excited about what you do every morning. I get excited. I was telling someone the other day, woke up Sunday morning and my boss and I had a conference call at 6:30 on Sunday morning. And we had a 2-hour conference call that we had to have. And, it's not easy to get up on a Sunday morning and the kids are screaming and what do you have to do? You have to do some work. But it was an exciting call and we did a lot of good work. And I get excited whether it's, Monday or Sunday about kind of getting involved in the business.
Interestingly, I always have to ask this question for someone, a CFO with a resume like yours, and that means multiple CFO chapters. How has that experience influenced how you partner with CEOs? You've had quite a few CEOs along the way that you've had to, figure out how you complement, how you lead beside them. What have you learned? How does it differ?
Yeah. I've really learned that there is so many different types of CFOs, right? CEOs. Yeah. And whether it's a founder, whether it's a technologist, whether it's a person with a CFO background, whether it's a person who has zero idea about finance, whether it's a hired gun. And I think that has really taught me how to partner, right? I had one of my first CEOs says to me, I know more about anything in this company except for finance. So I need you to run it all. To other folks who said, I was a CFO at some point in my life, and this is how I want to see the financials. This is how I want to understand it. And yes, you're the CFO, but I'm going to be heavily involved. And so it really changes the dynamic and it changes the partnership. And it's made me, listen, when I interview for roles, I also think about what does that partnership look like, right? I spend almost more time with my CEO, than I do with my wife sometimes or my family. And so it's very much a unique partnership. And that unique partnership really either makes both of us successful, or sometimes it's just makes it so it's not the right role for me. Depending on how that partnership works. And, spent the longest time at a company called Place IQ. And to this day, it was the most successful company the most successful exit I've, been in, and most successful company I've been in. And just from start to finish. And the founder and the CEO, he and I are still good friends today. And I talk to him every morning, every night, and every weekend. And we were true partners. And I think that the more that partnership exists, the better that, I'd say the better that company's going to do, but the more sort of enjoyable that opportunity is, but also I think the more, we're able to help push that company forward.
Again, you mentioned how, opportunities have been presented to you before. You've had an opportunity to get a sense of the CEO. One would imagine that, if there was a time, and I suspect there may have been, opportunities that you said, no, not for me. And when you did, perhaps it was because of a CEO, CFO chemistry. I don't know, but you're just like, this might not be a good fit for me. Is that accurate or yeah. He's nodding. No, he's nodding, everyone. Yes.
It's totally accurate. Yeah, no, listen, I always say on a lot of the interviews that I do, I want to break bread with the CEO before I accept a job offer, right? Yeah. Because I want to understand what that dynamic is going to be and how we're going to partner and when we're going to partner. And, and that is, I flew across the country one time to meet the CEO, wasn't based in New York, and spent 2 days with him just to spend some time with him to make sure we were going to be a good partner, right? I had lunch with my current CEO before I took the role to make sure we were going to be good partners. Because it's a true partnership, right? It's the speed dial that you make when something's wrong, when something's right. It's that speed dial. It's the first person you call. And so you really want to make sure it's like getting married, right? You want to make sure you have the right person. And so, yeah, I spend a ton of time. I also do diligence on not just on the company and not just on the investors, but on the person as well, right? Who's reported to that person in the past? What was that partnership like? And how did how did it end? How did it start? And how did it operate?
Every CFO appointment is different, but there have been times where board members have reached out to you originally, or is that not the way it happened in your case?
Yeah, a lot of times, a lot of the opportunities I've sort of taken, many of them have come from board members who I've worked with in the past who have called me and said, would you be interested in a role? And so, a lot of it is your network, right? A lot of times it's who have I worked with in the past and how successful was I? And, are those people you want to work with again? Right. The board members are, your CFO is not just your boss, is not just your CEO. Your boss is also your board members and your investors. And so you want to get a good group of investors, and, you hope that, you can never, you never have perfect investors. Usually I tend to find, but you can always have a really good group. And, with that said, I have a really amazing group of investors today in my current company, and really enjoy partnering with them, and can see myself partnering not just on this opportunity, but in future opportunities as well.
It wouldn't be a surprise to learn that executive recruiters were in the mix for certain appointments. Is that your case as well?
Yeah, there are. And I think maybe only once have I ever taken a role where it was only an executive recruiter. I did get, a reach out from an executive recruiter on this current role. With that said, I then knew one of the board members. And, so I reached out to the board member and then, went deeper in that direction. And so, yeah, a lot of times I get executive reach out, but a lot of times, especially in the advertising and marketing sector where I've been for 20 plus years, I tend to know someone in the company or around the company and get a chance to talk to folks about it.
Just from your CFO chapters, a lot of growth happened during your tours of duty for all of these companies. Were there transactions as well? Did very often they come to a conclusion through a transaction or a sale, or what was the end chapter often enough like?
Yeah, I think it's a little bit of both, right? With that said, I think it's in the venture world, right? I think it's something around 96% of venture-backed companies fail, right? Or don't make it. And so, I've had a few exits, really one big one, that I spent 8 years at, right? Or a little over 8 years and super successful. And then in other cases, it just, it was the time to move on. Right. And I spent multiple years at some companies. So it was just time to move on. And yeah, you have some short stints and you realize it's just not, that's just not the right role for you. And you move on from those as well. But yeah, you're always, the hope is always that you're going to get to, some type of liquidity event, or you're going to take it to whatever that next chapter is of growth. And maybe stay with it and sometimes just not.
Matt, we probably will have a few more career related questions for you, but right now we'd like to find out about TripleLift from you. For those who may not know the company, can you walk us through what the business does and how it makes money?
Yeah, sure. So, really we're a creative supply side platform. And really that, and what we're doing is kind of redefining digital advertising for both publishers and advertisers. So we deliver high innovative, kind of high quality ad experiences, creative first, right? So we're understanding and really connecting kind of the supply and the demand side, and, helping publishers monetize their inventory mostly through programmatic advertising. We're not a kind of a managed media business or a kind of a direct sold business. We're really focused on programmatic advertising, kind of, brand safe user experiences. And then we're, using our kind of creative ad formats, including what we call our pause ads, or in CTV advertising, native advertising, display advertising, and using those kind of enhanced focus, or our enhanced focus on creative to, target the kind of the right ad to the right people, the right time with the right message and the most sort of creatively enhanced message. And so, we're one of the first SSPs, so supply side platform SSP, to support kind of Amazon ads native, responsive e-commerce units, what we call our rec formats. Sort of that integration has really been sort of kind of groundbreaking for us as we've kind of diversified into retail media. We were originally known as kind of the native ad folks, and since then we've diversified into, not only into native, but in really all different formats from CTV and high impact display, and really kind of connecting, like I said, kind of connecting supply and demand and understanding publishers and marketers and agencies and advertisers and the end users.
Which part of the model do you find yourself spending the most time explaining to stakeholders?
Yeah, I think that more than anything, it's our creative units. So, you're taking this supply from publishers and you're connecting it to ad agencies that are buying that supply. But really what sits in the middle is our secret sauce, right? And it's these creative units. It's to give better experiences for, at the end of the day, for the end user, right? For the person that's going to potentially buy that product, right? And so it's understanding how our creative units fit into the page, they fit into the ecosystem, and how they get delivered.
Can you give us, and I believe you've explained it's venture backed. How would you describe sort of an abbreviated history of the capital structure?
Yeah, so it's actually private equity backed at this point. So the company was founded, about 13, 14 years ago, was acquired by Vista Equity in 2021. So it was a venture-backed business before that, got acquired by Vista in 2021. We're now, private equity backed. They've been in the business for 3 or 4 years now, and really for the next stage of growth, right? So, went from kind of grow to more sort of sustained growth, kind of much more kind of thinking about how does profitability now interact with that growth, right? As a private equity backed business would, as opposed to the venture backed side of things. And I can definitely talk more about that. I've been in both venture and private equity. But we're really kind of on that next stage of growth, right? we're valued at well over $1 billion and thinking through, what is our next stage and how do we think through, is it a public company? Is it a new sponsor? Is it a strategic view? Do we do some inorganic growth as well as organic growth and really strategically think about what the next stages of the company are? But it's a super exciting time to be within the company.
When you think about the health of this business, which metrics matter most to you as CFO?
Yeah. So, if you think about it, we have our gasoline, right? Being our supply side. So in one sense, it's our supply, right? What is a level supply we have? Who are our publishers? Are they premium or not? How much supply do we have, right? For lack of a better way, not to get too into the nuts and bolts of the advertising ecosystem to bore the listeners. And then it's the metrics on the buy side, right? So we're selling in many cases more programmatically than anything. So we're taking what we call our pause ads in the CTV ecosystem and we're selling them programmatically. And we were one of the first, vendors to do that or first, ad tech players to do that. And so it's on the sales side, right? Like who's buying? What are they buying? What's the, how much of it is recurring or more of a recurring business in the ad ecosystem? What does our retention rate look like? From an agency perspective, from a client perspective, what clients are buying, what agencies are buying, what sectors, and really just kind of understanding our, sort of our ecosystem, right? And so what does growth look like by client? What does growth look like by agency? Penetration across both of those. We're looking at upsell, what is not only retention, but what is upsell? So looking at the difference between kind of gross churn and or gross retention and net retention, and really understanding because we're an ad ecosystem, it's a little less about kind of the normal retention rates that you'd look at in a SaaS business, but it's really kind of adapting what are those sort of SaaS metrics into the ad ecosystem so we can really understand our clients.
We're always trying to understand how finance can sort of help reframe the conversation when the company's priorities there might be competing priorities within the company. Wondering, how do those core metrics differ from what the rest of the organization tends to focus on? In other words, what you just shared with us, that's what you're looking at. Is the rest of the organization, clearly some of the people are looking at different areas. How do you help them reset priorities when needed?
Yeah. So I think that as I think about the finance side too, it's not just kind of those sort of traditional kind of supply and demand metrics, but it's also just your cash metrics. It's your, it's all of your financial metrics. It's percent of revenue, to understand your efficiency across the organization. It's your EBITDA, it's your EBITDA margins and whatnot. How do I level set it across the organization? So at the end of the day, they all fit together, right? And so it's understanding at the end of the day, what are we trying to do? We're trying to be a profitable business, right? And we're trying to be more than anything. We're trying to be, kind of leverage free cash flow positive. And so it's level setting all of that from the bottoms up. How does everything fit together to bring it down to those bottom line, metrics that we need to be on the financial side? So, if you think about on the sales side, right? And the sales side, what do we have to do? We have to grow revenue. So how do we grow revenue? So how do we take the retention rates and understand to get to growth, right? From existing clients, we need to kind of fill the bucket and then hopefully grow the bucket. And then from new clients, we need to grow the bucket, right? Or grow the pie. And so how do you take the bottom line metrics and grow them up so that everyone can understand how each element fits together? And so we do that at the executive level. We're working to do that more at a non-executive level as well to make sure everyone understands how their little piece of the pie fits together, right? And as you think about kind of becoming more efficient, one of the things when I came on board was, working on the procurement side of things. So how do you think through spend? How do we think as we think through the cost of running the business, right? Think about R&D costs as a percent of revenue. You think about and becoming more efficient there. You think about our vendor costs. Well, if you have two vendors that do the same thing, half the organization's using one and half's using another. What if we use one? And how does that then lead to more cost efficiency and efficiencies across the organization? So really it's kind of taking how all of these different elements fit together and then relaying them to what the bottom line looks like.
That efficiency, and again, I think you mentioned that the timing of that. When you first arrived, you took a look at procurement. Is that accurate? And sort of what you just shared, that was sort of the refinement of it, how together you realized there were greater efficiencies that could be achieved. Was that unusual? I mean, as a CFO steps into a new role and you're looking around at the efficiencies of the organization and where they might be improved, that's a delicate task. Is that an understatement? Now here's where your leadership smarts comes into play, your EQ comes into play, because you have to approach people and say that we got to do a little better here. How am I doing? Can you, I'm just wondering if you can shed a little more light on your approach. What allows you to achieve that?
Yeah, listen, I think going back and just from my career, right? Going back to being more of an operational leader, first of all, is it helps, right? Which is understanding how a business operates. And one of the reasons I've been in ad tech for a long time is when you understand how an industry operates and the economics of the industry, it helps you be a more effective CFO. It also helps you then to this task understand what are those technologies that we need to be operating off of. Like, what are the requirements? What are the must-haves versus the nice-to-haves, right? And so understanding that and then pushing the organization to say, hey, if you had to choose, what would you choose and why would you choose that? And then, I tend to find that in organizations I've come into, there's always some inefficiency, right? And in some cases, it's greater than others, right? And as you scale a business and, this business has been scaled from where it was to where it is today, a lot of times when companies go through scaling exercise, a lot of times you throw money at, right? Because you don't have the time necessarily to take a step back and say, how do we get more efficient? Because growth is going like this, right? When the company was acquired in 2021, it was on a rocket ship, right, of growth. And so what do? You don't necessarily focus as much on the expense. You don't necessarily focus as much on the different technologies. You just get deals done and you move on. And so now you have to take a step back. And a lot of times when I've come in, you have to take a quick step back and say, and sometimes a longer step back and say, okay, what wasn't done efficiently, or what deal wasn't negotiated efficiently, or where could there be more efficiencies gained? And listen, that's very very much what happens more in a private equity backed business, right? When they acquire businesses, okay, how do we gain efficiencies? And that's a lot of where I've spent my time, is how do we gain more efficiencies? Where are there multiple vendors? Where are there vendor contracts where we're overpaying for things? Where are there opportunities to really kind of, I don't want to say scale back at all, but really use, more effectively use the cash that we have, right? And that's a lot of where I've spent time. And it's at the same time, it's not coming in necessarily with a heavy hand, but it's coming in with a partnership eye, right? And understanding and partnering across the organization to say, hey, listen, here's what my goal is. Let's please partner on this. And so it's really developing partnerships within the organization so that people don't think you're coming in and trying to slice things. You're coming in and trying to make this organization better.
Pointers to partner with operators. By Matt. No, this is what you've always, I think, excelled at, and you're getting in their minds. You're understanding why they're prioritizing the way they are, and where, greater efficiencies are not necessarily always a priority, and what are the circumstances which have led to that. I don't know, but what is the mindset of a CFO who knows how to partner with operators effectively?
Yeah, the mind, at the end of the day, the mindset is we're all in this for the same reason, right? We all want this company to succeed. And I think that you get challenges sometimes, which is people come in and say, well, my job is to cut costs and my job is to grow revenue. No. My job is along with everyone else's, which is to make this company successful. Right. Yes. And as long as everyone believes that and everyone understands that partnership is easy. When people don't, it becomes a little more difficult. Right. And at times, sure, when I come in, people feel threatened by me at times because I'm the CFO. And so people can definitely feel threatened by me. And if I question things, and sometimes I definitely question things a little bit, probably more, aggressively than I should, but, I will question everything. And I think the more people understand the fact that I'm questioning out of the good of the business and through that partnership, the better that partnership is. And I think that one of the things that COVID set back is some of that partnership element, because it's difficult on this screen like this to create that partnership at times.
Interesting.
And so I think with COVID starting to get more people back into offices, and whether it's 1 day a week or 3 days a week or whatever that looks like, I think the more I create that personal relationship with someone and break bread with someone and develop that partnership. Now, when I come in and say, hey, let's really take a look at this, they realize I'm not here questioning the work they've done. I'm trying to help make them better, help the organization get better. And I think that is the key piece, which is really becoming that partner with everyone and everyone understanding that's really what I'm trying to do. And at times I know it's really challenging because I am the CFO. And if I find inefficiency, I'm going to try to tackle that inefficiency to try to, create a better organization, whether it's operational or financial.
And you're at the same time trying to instill that in your team members, the finance folks who go out there and represent the same priorities, the same goal. Are they able to translate how you lead or, what the target is?
100%. And listen, I've had plenty of people who followed me through my career to different companies. I have people who've worked with me for 3+ companies in the past. And I hope that's one of the things and that's one of the reasons people want to come work with me again, because I try to teach my team members how to do that and try to really partner with them. At the end of the day, I may be the CFO, but I have, a lot of people that I really lean on as well and look to learn from also. Right. As I say, I'm always trying to train my directs to be the next CFO, right? Because that's my goal, is to develop the people under me to be, better at what they do and to understand different gaps that they may have in their kind of, education and their growth.
Looking forward, what, financial or strategic risk, let's say, sits most squarely on your desk right now?
Yeah. Listen, I think that, the company was, the advertising ecosystem is a tough ecosystem right now, right? You look at the public markets and you look at some of the businesses in the public markets and they haven't necessarily performed well, right? And we were acquired in 2021 and we were the native, native company. And now we're not just the native company, right? We are really the creative SSP, and we are really developing some really new, interesting creative formats. We are really starting to really kind of scale that business, scale the business up. And I'd say that, how do we do that? And how do we do that by using the capital at our disposal, right? If you have $10 to spend, how do you spend that $10? How do you prioritize it, right? And you need to prioritize it both from a short-term and a long-term perspective. And when you're in, when you're in a private equity, world, you have to prioritize it looking at profitability, not just from a both short and long-term and cash flow. So how do you invest $10 today, knowing what your payback's going to look like and what period of time is that payback going to look like? And so we're launching a lot of really new creative formats and expansion into CTV, as I said, into mobile web and in-app. And how do we think about the investments we want to make? And so on my desk is, what investments are we going to make? How are we going to make those investments? And then more importantly, hey, what have we gone, 20, 30 minutes without talking about saying that word AI? But how do we,
I was just about to mention.
Yeah. How do we use AI to get there? So what are the investments we're going to make in AI? And what does the payback look like? And in some cases, the payback says, hey, we're going to be 20% more productive. And in some cases, it says, hey, we're going to be able to scale back some of the costs in the business. And so how do you think through that investment? And we're sitting here in December and we're finalizing our annual plan for next year. And so in that annual plan, it's how do we allocate the dollars that we have to spend next year based on next year's growth expectations, knowing that, the industry's had some challenges this year, and some of that is just some of the market, and a lot of it is really just market uncertainty more than anything, right? It's amazing the stock market is where it is today, and the rates were cut again. Was that yesterday? Wow. They just cut the rates again yesterday, and it's just more uncertain. Even though the markets are still in a good spot, there's just a lot of uncertainty for marketers, and we rely on marketing spend. And so how do we kind of think that through for next year?
Can you tell us, just keeping with something of what you shared there, as AI investments grow, how is the finance team assessing the return on those initiatives? And that continues to probably change, and as you see, new value that perhaps you hadn't perceived before. I don't know, but the challenge of assessing the return on those investments. Can you reflect on that?
Yeah, it's a huge challenge. It's interesting. So I was just at a Vista conference a couple weeks ago, and the whole topic was AI, right? Basically, almost the entire conference was about AI, and it's a big challenge to assess what is the payback from that? What is the ROI on AI investment? Even though we know it's big, right? But it's starting to get at the point that I can say, if we make this investment, is it cost avoidance? Is it revenue upside? Is it, unfortunately, there are cost cuts sometimes. And so we're starting to understand that. So we're saying, and especially as you think about, kind of engineering, and as you think about services, what types of AI tools can we use and can we launch that can make customer service better and more automated? What can we do in terms of coding? How can we code how can we create new products by using AI? And more importantly for right now, it's not about cost avoidance, it's about creating things faster, right? How can we get to market faster by using AI and using some of these amazing tools? And so there's definitely a lot of models that I've started creating of, as we launch, or as we decide which tools are we going to use, what does the payback look like? And what is the, as I think about next year, it definitely played into my AOP planning, or my annual planning, to say, hey, by using AI, our expectation is that we won't need to hire, or we'll be able to launch faster, or we'll be able to, our customer service will be better. So we're definitely starting to model that out, and it's not easy yet, right? There's not as much of a, clear, sort of outcome from that yet, but we're definitely getting better at it.
It's interesting how we're interested in how you view the finance function as where it's likely and how it's likely to evolve going forward, having been a CFO for as many years as you have in different organizations, with AI increasingly shaping decision-making, across organizations, taking more of that role on. Well, that was finance's role. We helped people make decisions. We showed them the numbers that allowed them to do that. Now AI appears poised to play a much larger role in decision making. Do you even reflect on that, or are you is that tell us something about
Yeah, all the time. I was on a panel a couple of weeks ago where the topic was AI and the finance function, right?
Yeah.
I have Claude embedded into my Excel. and I have an Excel sheet open and I ask Claude questions right in the Excel sheet. Can you analyze this? Can you tell me if can you make sure there's no errors? But as we close the books, we use AI now, and we use Claude, and we're looking at other, AI embedded into other FP&A platforms and how that can help. It's definitely, I can do a lot of the analysis myself now, or faster, I'd say, or, the real thing that I think makes it the most valuable more than anything is that you still need the person to analyze the data, in my opinion. You still need a person to execute on it, right? But what Claude can do, and we use Claude, I use a lot of Claude or, Anthropic, but we use a little bit of ChatGPT in places and some of these other platforms, and we're launching a new FP&A platform that has AI baked in and whatnot. But a lot of it is, what is happening is that books are getting closed faster. The data is getting analyzed quicker. The differences are getting analyzed faster, so that what can we do? We can use it to make better decisions, better, faster decisions for the organization that can help things change faster. And I think you're not waiting 15 days to close the books anymore. You're not waiting, even in many cases, 10 days or 8 days. You're closing the books faster. You're getting the analytics faster, and now you can make changes faster. And so if something's going wrong in the business or something's going right in the business, you can throw more fuel on that fire much faster than you used to be able to do before. And listen, I think the challenge more than anything is not necessarily at the senior levels. The challenge will be at the junior levels, right? Where you don't need a junior analyst to analyze the data anymore because your junior analyst has been replaced by AI. And so AI is doing a lot of that work. You still need the senior folks to understand what it means and how to deploy it. And I think there's still that element that is still very important. AI does analyze it, but there's definitely issues. There are definitely challenges you still need to kind of understand.
And you said junior and you said senior, but there's this middle management level as well. I was recently at one of these discussions myself, and they were sharing how, well, the more junior people can come in and use the tools, and you can help take out the middle management. I don't know if that's something you've seen, but apparently there's beginning to be some numbers in that respect.
Yeah, and I'm hearing that too. I still think middle management has a couple years experience today. They can do some of the analysis, and they can also understand where the mistakes are being made. That's where the junior people can't, right? If you run the data into a system and you look at the other end like that data doesn't make any sense, they're still not able to necessarily do that. So I think the middle management layer for me today is still safe. It's the sort of junior entry level people, I think, that are, that will come under fire at some point. And I say that at some point. Am I not hiring junior people right now because of AI? No. Like we're still full bore ahead building out function. We're just right now, we're getting more efficient at how we close the books. We're getting more efficient at how we project. We're getting more efficient in how we analyze across the company and really across my finance team.
All right. Well, we'll have a few more questions about the business a little later on. Right now, we're going to ask for a finance strategic moment. And again, this might have been any time during your long career, multi-chapter career, but we're looking for a moment of insight that you've experienced along the way that led you to, I don't know, pursue an opportunity, avoid a risk, whatever it may have been.
Yeah, I think that I'll sort of go back to my Place IQ days, and what I would say is a lot of people always say companies get bought, not sold. And I think that it's very valid, but I think that a lot of times to get to that point, to get bought, you need to understand how you might sell your company, and you need to understand, how does your company merge into those other ecosystems? And I'd say that, what I would say kind of, as I think about what is that sort of big sort of strategic moment, it's the first time that we had an inbound, and it was, and I'm, not allowed to say who it was from, but it's thinking about how does that inbound company combine with my company, and what are those true synergies, right? And understanding the true synergies, both from a revenue and a cost perspective. And so understanding how to look at that. And so the more you can then analyze how your company fits into another business, fits into a public market, fits into another, even just a product build, you now can understand how to better launch a new product. You can understand how better to think about a strategic, acquisition or a strategic buy you may want to make, right? And what are those core metrics you should look at, right? And it's, And again, there's some of those synergies, and you think about some of the really, simple synergies, which are, my G&A team, you don't need two G&A teams necessarily and whatnot, but it's how do you think about the unit economics of that combined entity? And so understanding the unit economics for that combined entity can help you think about what is a combination, and does a combination make sense? And does 1 + 1 really equal 3? Or does 1 + 1 just equal 1.5, right? And so as you think that through, you can now develop different elements of how should I think through a strategic merger? How should I think through a strategic partnership? Could I go sell the business, or do I need to get bought? And with that said, when you're thinking about getting bought, you need to develop those business development relationships in advance to someone wanting to come in and buy your company. And so it's really that sort of strategic moment and insight that I gained, which is think about every single thing about your company. What is every single line item? What is every single piece of expense and revenue? Who are your clients, and what are they thinking about, and what might be another opportunity for them to buy, whether it's an upsell, a cross sell, and what do those products look like, and always be thinking about those things. And so you're really understanding your business from soup to nuts. And like I said, the unit economics are super important to understand. What are your push and pull? What are your points of differentiation? What are your points of leverage? And I think the more you understand that about your business, the better you're going to be in not just thinking through those strategic, but now just operating the business, right? Every AOP, every forecast. Are we spending too much? Are we not spending enough? Is my percent of revenue trending the way it should be from an R&D and a sales perspective? And that really makes you help plan that business better and think strategically about your company.
Just speaking broadly, I want to ask a follow-up, if that's okay. Just speaking broadly, again, you had been a CFO multiple times before Place IQ. This inbound, there were other inbound discussions perhaps that happened during your earlier CFO chapters, but I think what you're saying is that you discovered you needed to be prepared to understand how to quickly address and assess such inbound. And it wasn't apparent to you as apparent earlier, perhaps. Maybe those companies were at a different stage in their life cycle or what have you. I'm just wondering for CFOs out there who are thinking, now we'd be totally unprepared, nor do we have the resources to deploy to try to assess or engage with this partner. The reality is too often companies are unprepared.
Yeah, I think too often companies are unprepared, and too often CFOs are unprepared. And I've even had a couple of recent, conversations where people are on the market, and I've had questions for CFOs and there's no answers, right? And I'm like, do you know your business? You don't know your business, right? And so I think it's always being prepared. And I think that what the Place IQ opportunity did for me more than anything was the inbound was from one that you would have never expected. Right? It was a different type of expectation. And I think that's where things really, hit home, which is, hey, it's not necessarily the folks you're thinking about. It's the folks you're not thinking about. Yeah. And I think that's where you're truly understanding your business, right? It's not just combining with your closest competitor. It's how do you diversify? How do you streamline? And what types of, whether it's new data sets, whether it's new technologies, whether it's new platforms, what truly those look like? And listen, you may get an inbound at any time in your life, right? And you never know. And so it's always about, don't say, hey, we're not going to sell this company, for 4 more years, so I got plenty of time to understand these things. You should always be trying to get better and trying to truly understand your business and, what makes it tick. And I think that, and again, not that I hadn't understood that before that, but I think that, we had more inbound from interesting ideas and interesting companies, such that it made you think about what else might actually be out there, and who else should we be talking to, and how might that fit together with your business.
All right. Well, thank you for that. We're going to jump to our mentoring round. This is where you've had this experience so many times, stepping into a CFO role for the first 60 days. You could probably do some myth busting here. What really is your priorities when you first arrive that first 60 days? What do you tell yourself?
Yeah, it's find all the bad things and try to fix those. No, listen, I think there's a good, bad, and ugly. right? And so you have to start from the good, bad, and ugly. And so the good you don't really want to touch, just let it operate. The bad, you see how bad is it and what do you need to fix, and the ugly are things you need to get fixed. And there's definitely elements of if it's not broke, don't fix it. And there's then the elements of what has to be fixed immediately. And I think that's the coming in and saying, here's everything that needs to be done. Now let me prioritize it. And there's a lot of things I just don't even touch on day one because it's not broken, or or let me rephrase that. It is broken, but it's operating. And so for me, a lot of it is about identifying everything that has to get done. And do I have a playbook? I do have a playbook. Do I have things that I know that I'm sure will have to get fixed? I do. But really it's what can you get done and what are those quick little wins based on where the company is. Right. And I look at, the current company, I almost was less of a CFO in day one of coming into my current role. And I was more of almost as a rev ops leader than I was as a CFO on day one because, finance was operating to some extent or accounting was. But I knew that we didn't have enough metrics around our sales organization. We didn't have enough metrics around some of our services. We didn't have enough metrics. And so I knew I needed to spend more time there. And so really it's kind of analyzing where's your time best spent and then working to the other areas as time goes on. And then second to that, it's the people, right? Building relationships with your people, but also understanding where do you have gaps and where do you to fill those gaps and filling them quickly. Because the quicker you can get the right people in the right seats, the quicker they can help you get things done. I'm not a one-man team at all. I'm a team. I'm a team player and I love to put together a good team and work with a good team. And so a lot of it is making sure you get the right team.
Matt, it looks like you've been at TripleLift now 6 months. Your colleagues know a lot about you, but they did not know this. Anything come to mind, something most people might not know about you? An interest that you have, something from a chapter from your past, a pursuit, a hobby back in college?
No, I don't. I don't know. I think at this point they probably know because we ask on day one what's something you may not know about us. But no, listen. Like I said, I grew up in a family business, and on top of that, I also was our on-air talent in my early days with my brothers and I and my parents. So there's some good commercials that we used to do back in those days.
Oh,
it used to have people come, and even to this day, sometimes I'm on one here and there. And so it was always fun. I had people that would be in Maine and be like, "Oh my God, I saw you on TV." So
TV
it was
as well as radio?
Just TV.
Really?
Just TV. So yeah. So it's,
and how old were you? Did you appear or was it mom and dad who?
I appeared, I think at early,
really?
Probably at age 5 or 6 were my first ones. I was the beanbag kid. It was
really?
At the end of every commercial, I was advertising beanbags back in those days. I don't know what it says that beanbags aren't necessarily the thing anymore.
Again, what was the metro area?
It was Portland, Maine.
Portland, Maine.
So, yeah.
That's wonderful. Thank you for that. We're going to ask you to look forward finally. We're wondering about your priorities for the coming year, and this is our wrap up. So as a CFO, what are your priorities for the coming 12 months?
Yeah. So first and foremost, cash is king, right? So it's all about being cash flow positive. So it's, first and foremost on the finance side, it's cash flow positive. And then there's the typical finance metrics of, it's cash flow, it's EBITDA and EBITDA margin and revenue growth, right? So those are the first and foremost things that really look for. But at the end of the day, it's, like I said, I care about where the company is and what we're doing. And we were the native company and we're not just a native company anymore. And so it's how do we really continue to diversify our product suite? How do we grow our CTV business? How do we grow our, high impact display business? We have some really exciting things we're doing in both of those businesses and they're growing and scaling quite nicely. And how do we just, throw more fuel on that fire and how do we, invest in the right places for not just for 2026, but for 27 and beyond. And so for me, my priorities are how do we take the cash that we are investing in the business this year, invest it in the right places, get the right people in the right seats and really have some, amazing growth. And then finally it's partnership, right? Continuing 6 months in, I'm, building some nice partnerships within the company, but it's just continuing to build those partnerships. I have an amazing CEO right now that I'm really excited, to partner with. I have an amazing, COO who I worked with 20 years ago and working with again, a new head of HR, who I'm really enjoying working with, but it's really just continuing to build those partnerships, both at the senior levels and on down, and I'm in the weeds with my team just as much as I'm, handling all the CFO tasks. So it's really, it's partnership, pushing the business forward, and then more than it, and then, hitting the financial metrics that we need to deliver on.
Matt Novick, thank you for joining us on CFO Thought Leader.
Thank you. It's been great to be here.